Hello everyone, I'm Jane Hanlon, the Mortgage Club Manager at AdviseWise, and welcome to today's Ask Jane. Joining me today is Peter Barton from Ashfords on the topic of extra legal issues that they encounter whilst doing lifetime mortgages and a little bit about completion days. So welcome Peter, thank you for joining us today. We're very grateful for you coming along to do this series on the legal aspects of the lifetime mortgages. We've covered a few things off on our series. We've done the lasting power of attorneys and we've done lease extensions, but there's a few more things I'm sure that crop up along the way. So I wanted to ask you about waiver of occupancy.
Oh, joy. Thanks. That's a question to start off. Yes, no. This is the sometimes known as deeds of consent, occupiers waivers, waivers of occupancy. This is where there's anybody living in the property who isn't going to be one of the borrowers or on the application who is over the age of 18. For the standard high street market, it's 17. For equity release, it's 18. And certainly, depending on the lender, an occupier consent form may be needed. Now, I'll just run through, the essence is that the occupier will have to take a form which is produced by the lender and the lender's solicitors, not by us, I hasten to add. They'll have to take it to an independent solicitor to have it signed off, during which meeting they'll be advised on the dangers of being an occupier and signing this waiver. And actually, in the equity release markets, there's not really any dangers. Obviously the danger is repossession, but on a normal mortgage, the repossession would be you've not kept up repayments of the mortgage. Obviously, we don't have that on equity release, so the risks really are very minimal for an occupier's waiver under equity release. The difficulty that people are finding, of course, is getting somebody to witness these documents and advise on them. And the costs, from what I can hear across the country, are quite astronomical. The typical fee is about £180 plus VAT. Obviously, I've heard far higher for places like Bath, London. They can be £300–400 per document, which can be pretty painful if you've got 2 or 3 children still living with you, or 18, 19, 20. Now, there are a few lenders that don't insist on waivers, such as Aviva and Just Retirement, but they have a discretion. If they have concerns that somebody in the property may actually have a claim against the property, they can request a waiver, but by and large they don't insist on one, unless generally it's a partner or a husband or wife, but then they should be on their own anyway, and so they may decline for other reasons. But certainly all the other vendors insist on occupiers forms, and I do know that one of the vendors, depending on the product type, would permit an independent witness to a waiver. And when it comes, I know that the next question will probably be, Peter, what happens if clients are struggling? I would say if clients have exhausted their avenues, and I've heard of people from 18, 20 solicitors trying to get an occupier waiver signed off, and everyone saying we won't touch that. And you might say to me, Peter, why won't solicitors advise them? It's because there's been a huge raft of case law about these where the solicitors have been deemed not to advise the occupiers properly and have been successfully sued. The law tends to find in favour of the occupier as opposed to the solicitor. So solicitors are naturally reluctant to advise on something where they may find themselves being sued later on, but they're only charged at what they would do as a relatively low cost. But if your clients have exhausted all the local area, then please do come back to me. I have a contact within a company he set up to sign off occupiers waivers. He operates in Plymouth, so the best part of the world, obviously, Jane, as you know, almost in glorious Cornwall. But he can operate nationally, so he's based down there, he covers the whole of the country, and it is seeing occupiers within 5 working days from instruction.
Well, that's useful to know. I didn't realise it was 18. I thought it was 17.
18 for equity release. And also just to say, the person that we use charges £150, including VAT, for the documents. I'm not plugging him, I'm just saying it's noticeably cheaper than you get elsewhere. just going back to occupiers forms, it was actually asked to me this morning, Jane, first of all, do we have to disclose the offer to our occupier? And also, how revealing are the occupiers' consents forms? So what detail do they give, amounts, that sort of thing? I'm pleased to say there's only one lender that currently stipulates the amount that the borrower is borrowing, which is L&G. So what's on the front page of the document, you're borrowing 100,000 or whatever. All the other vendors, they're silent, they just have name, address and conditions. Now, do you have to disclose the offer? Well, obviously, you should be discussing what you're doing with the family, but that's entirely up to you. But the occupiers are entitled, and the solicitor, they're saying, may insist on it, that they are entitled to ask for a copy of the offer to support the occupier's waiver when they go to the meeting. But by and large, it's not often that we're asked to supply a copy of the offer to the occupier. Okay.
Lovely, thank you. Just wanted to cover off for our members the difference between joint and tenants in common. Now, the tenants in common seem to be more of an issue, and we do see them a lot more than we used to.
Yes, Jane, if I had £1 for every time an advisor asked me what's the difference between joint tenants and tenants in common, I'd be doing this call live from Barbados. So and I know this will be the last time I explain it. So it all goes back to ownership of the property. Clients will generally not know what they mean, and the minute you say to them tenants in common, they can get irate and say, but we're not tenants, we own the property. So it's a form of wording for how you and somebody else can own the property, and obviously you have up to 4 people on the deeds. Joint tenants simply means that you own it jointly, and if one of you dies, the survivor will automatically inherit the property. So Jane, you and I own a property together as joint tenants. I make a will that gives my half share of the property to Kylie Minogue. I then die. Poor old Kylie won't get my half share of the property. It goes automatically to you outside the will because we own it as joint tenants. Tenants in common means that we own the share of the property in distinct shares. So the presumption is 50-50 unless you've got a separate document. It will never show on the deeds what percentage you own the property in. There'll always be a separate document called a declaration of trust evidencing whether we own it in different percentages. And we could own it 1%, 99, 50-50, 60-40, 80, depending on, certainly where people are coming on later in life and adding somebody onto the deeds, sometimes just for the purposes of equity release, it's often added on 1% so that the bulk passes to the original owner's family. So in my scenario, you and I own the property, tenants in common, I die, it goes as per my will. So good old Kylie will inherit my share of the property, whatever that may be. Why is it an issue? An issue for a number of reasons. Obviously, one of the lenders, LV, they insist the property is owned as joint tenants, but that's by the by. It's an issue really if I'm an advisor, I'm just out seeing Jane, late husband's on the deeds, you own it as tenants in common. We then have to go back to the will and say, actually, did the deceased person, did they give you the, because it's passed by his will, we've got to check that it actually went to you outright and didn't go via a trust. So we are seeing this more and more, Jane. There are partners on the deeds, not you tend to find joint tenants where it's first and only marriage, been married for 90 years, and it just passes on. Because we're seeing more second marriages, third marriages, partners, you get the tenants in common because each person's will have specific thoughts and views as to, I've got my own family, Jane. I want to make sure that, yes, you can have the right to live in my share of the property for the rest of your days. But ultimately, when you pop to cogs, as my mother would say, it goes on to my children. Of course, in that scenario, if you're the sole borrower, I pop to my cogs, then we have to go to the will, see what it says. If it's got this life interest trust in it, then we need to look at speaking to my family to see whether they're unpickers or not. That's what causes the issue. But everybody out there, joint tenants passes automatically to survivors. So I'm seeing Jane, she owns it as joint tenants, she's a sole borrower, all we need is the death certificate. On the opposite side, seeing Jane, tenants in common, I will need to see death certificate and the will and the grant of probate to show that it's been dealt with properly.
Right, because obviously if it's tenants in common and you've built in a reserve facility and one was to die and you had this will trust in place, then with the majority of lenders, I'm correct in thinking that you wouldn't be able to access the reserve.
Jane, you're always correct, annoyingly. You really You don't really need me. So you're right. And I've come across an awful lot where people have taken into product, have the reserve facility, and sometimes after they've taken it, they'll change their deeds to tenants in common, thinking they're saving care fees or protecting their own families. I get a phone call from Jane saying, "Oh, husband's just died, but they won't let me access my reserve," and it's heartbreaking. And worse than that, Jane, as well, within this situation is, if you've got that situation, so someone's died, owning this tenants in common, there's a will trust in place, the survivor can't be mortgaged, so they can't move and take the whole thing with them, and can't take the lender with them. So it's actually quite scary. So it was, on application, if I'm seeing Jane and John doing a joint and doing this tenants in common, and we've got will trust, you can do that. There's no problems about the will trusts and owning a tenants in common. But what I will be saying to you and your other half is, watch out. If there's a reserve, watch out for this, because it will impact on what you can do in the future.
Lovely. So something to be mindful of, and obviously to prepare your clients, I think.
Sorry, Jane, and there are only 2 lenders that would allow access to the reserve if you're in a tenants in common and there's a will trust.
Yeah, so again, maybe selection choice on that one when you're advising and recommending. How easy is it to add someone to the title, and is there any stamp duty issues?
Oh gosh, that's a loaded question, Jane.
Sorry.
It is quite straightforward. It can all be done as part of the equity release process. To add somebody onto the deeds, we would always insist, because of the conflict rules, that the person who owns the property takes independent legal advice to make sure they're not being pressured into it, explain it to their family, and they're happy with the percentage they're giving. So in the past, I've had some very uncomfortable meetings with couples, and they've been around for 30 years, and the husband's only giving the wife 1%. So it avoids those awkward meetings. So it's quite straightforward, and we can source out the independent legal advice if they need to. Stamp duty is a whole different ball game, in the sense of, obviously at the moment we don't need to worry about it until, thank goodness, unless it's a multi-million-pound property. But as well as the stamp duty, and I get this question a lot from advisors saying, "Peter, I know something on, is there stamp duty?" I will go straight back and say, is any money changing hands? Is there a mortgage on the property at the moment? Because if there is, let's ignore these stamp duty changes, these temporary changes at the moment. If, for example, you're adding somebody on, the current changes aren't around, let's say, and the mortgage is, you've got an existing mortgage of 100,000, there's no stamp duty, because the person that's coming on the deeds is assumed to take a £50,000 liability for that existing mortgage on the day of completion, and then disappear straight away. So it's under 125, we can do whatever. However, Jane, you come to me, you want to add something onto the deeds, you've got a £300,000 mortgage, you want to give your other half 50%, then that's £150,000 at stamp duty. So it's above the threshold, it will bear stamp duty. The legitimate way around that, Jane, would say, well, don't give him 50%, give him 10%. So he's actually only assuming £30,000. So you can avoid that sticky issue coming up with stamp duty, unless it's such a sizable mortgage and you're adamant you want to give 50%. So stamp duty is an issue on that one.
So obviously something to check with people like yourselves then before the
Always
advice goes. Yeah. So how about actually removing somebody from the title, perhaps if they've deceased?
Right. Well, I think there's removing somebody, and also so let's talk about removing somebody first. So you put court on the deeds, and it was done because some canny solicitor thought it'd be a great inheritance tax wheeze that doesn't really work. So if we're taking somebody off who's alive and living, the lenders insist that person coming off has independent legal advice. So they have to go away to a completely separate solicitor. And again, stamp duty will be payable if funds are changing hands, or there's an existing mortgage. So you need to watch out for that one again.
Right. Okay.
Also, you need to watch out for capital gains tax. If your daughter hasn't been living with you, but she's always had her own house, and if the house has gone up in value from when she's been on the deeds to when then there is the potential for capital gains tax to be paid by her. It has to be declared on your daughter's income tax return and paid the July following the day of completion. So you need to watch out for capital gains tax. I would always say to the daughter, look, you need to take advice, it's your responsibility, but we know full well that Jane, you'd probably pay it, so she'd have to pay it. So just watch out for CGT, and particularly when you've had somebody on in the 90s and we're now 20 years on and house prices have gone up, it can be quite painful. If you're taking a dead person off the deeds, which sounds a bit weird, but if you're taking, certainly back to the joint tenants in common situation, your joint tenants, all we need is an original registrar's copy, which is usually green, death certificate, and we can do that as part of the process. If you're tenants in common, we need the death certificate, we need to see the will to make sure you can house it, Jane, and the land registry will insist on the grant of probate, so that we can get that through to take them off the deeds. So we do often find that people haven't got the grant of probate. So we try to say to people early on, look, if you do a personal application yourself, it's far cheaper, obviously, solicitors and the probate office are very consumer friendly, customer friendly. They're lovely. My sister did my mother's, because I wouldn't necessarily use solicitors, and she went down to Truro County Court to have it signed off because they were Cornish originally, and my sister said they were the nicest people she's ever met, so they're absolutely lovely there. So it's not a difficult process to do. I'm always happy to help clients, through the forms if they need to. But certainly taking a dead person off, if the joint tenant's easy peasy, if the tenants in common, we need to do a bit more digging.
Lovely. And what we are seeing now, unfortunately, is an awful number of cases during this COVID where they've now decided to divorce and separate. So they're at various stages of perhaps going down the separation order or the divorce and going to absolute. Obviously, the lenders want the official documents to make sure that there's a financial settlement. So it has to be done simultaneously. How easy is that for you?
Right, it depends which route they're going. I mean, if they've got the documents, it's easy and it should take no longer than a normal equitable case. So if they're actually getting divorced, the lenders, solicitors will always want to see decree absolute and a financial consent order signed off by the court. And obviously the deeds will have to be transferred into the sole name of the borrower. So obviously you can see if they've not reached that stage and the divorce is on its way, it has to continue that route. So it depends on how amicable or otherwise the couple are. If they've just started out, which we get an awful lot of, clients at that point have two choices: either divorce and we'll see you in 18 months' time probably, or I always call it the sticking plaster route. You're always hiding away the problem. You can have a separation agreement, which all the vendors are happy with. Doesn't have to go to the court. We can draft a document on behalf of the borrower and send it through to the other half. And it just addresses the issue of the property. So Jane, you're saying in this document, I have no claim on 15 Barton mansions, and you're selling that off. So actually, the separation agreement, again, that can be done, if they're amicable within normal equitable lease timescales. You don't want to get things moving. It's a good way of doing it. It means you can, usually they're paying the spouse some money anyway. So it means that they can get on with their lives and they don't have to wait 18 months for any money to come through. Cost-wise, you're looking at about £750 plus VAT for a properly drawn up separation agreement, which goes through smoothly. So on both of those, if we've got the documents in place, should be no issues. And separation agreement, we've got a matrimonial team here, so we can assist with that, and they're pretty good at doing it.
Well, that sounds a good option, to be honest with you, and something that we perhaps will be just telling the advisors about, because we are getting a lot of them now. Obviously, yes. COVID and being pent up has changed people's lives.
Yes, we all know that feeling, Jane. And certainly, it's one of those, mentally, I can always see advisors packing up their briefcase while they're talking to clients, saying, "Well, we've just split up," but actually, the separation agreement is the best of both worlds. You free the property from any future divorce, and also release some funds so that everyone can move on a bit.
Excellent. We're also seeing purchases now, a lot of upsizing, moving closer to family. Is there any issues with purchasing? Obviously, it's a little bit more work because...
I always say to clients on the purchase and to the advisors is, for goodness sake, tell the clients not to listen to anybody apart from us. Ideally, we'll deal with, it's true, Jane, Ideally, we'll be doing the sale and purchase at the same time. You know, we can just step in, because we know estate agents are lovely, and they are likely to encourage the use of their own solicitors that will pay them a nice big hefty fee.
Yeah, they get kept, don't they?
They do, but then of course you then find out the solicitors don't do record release and don't understand it, so we end up in the middle, which is, and that does delay things, Jane. I'm not going to lie to you, because you find that the solicitors don't quite understand and will object to things. So, well, why do we need that? And we're saying we don't need to explain it; we just need it, because we work well with it. Overage and Nat and Barry Smith, so we know what we're asking for. So we often spend an awful lot of time just waiting for those documents to come through. Our team are fully conversant with what needs to be done. The main delay tends to be, obviously, when we've got all the searches in, the contract in, we have to send the whole pack over to an acting Overage for them to check. Obviously, it's outside of their normal SLAs, because it is an awful lot of documents. We do sometimes get slightly longer delays than we'd expect, if we're honest. But I always say to advisors and clients, allow an extra month. And normally an average sale and purchase should take 3 months. With a equity release on board, I say it before. And certainly we've got a good relationship with the lender solicitors, which cuts out a lot of the questions that can be asked of us, because they know we won't answer them, because they don't need to answer those questions. So, as long as clients can bear, ignore the people they're buying the house from and the pressure that's coming on, the case will get through, because of course we can't exchange contracts actually until we get approval from Overage and an act.
So that also covers porting off, because we are starting to see quite a lot of porting now as well, across the desk.
Yes. Despite you and I just speaking to clients and they're saying, oh, no, we'll never move. We will do this equity, we're going to stay here forever. And they say we have a team that's just busy just doing nothing but porting. So yes, the same applies.
Title issues that you come up against, rights of way and things like that. I mean, do they take longer?
It depends what the issue is. We can have a number. The thing we're finding most on deeds at the moment are overage agreements. So you've got a nice garden and it's big enough for another house. When you bought the property, the people selling it said, Jane, we'll sell you this house, but if you develop it into a property, we want a percentage split of the profit. That's always a big no-no for equity release. No lender will touch it, and actually, the former owners, in any right mind, they'll never give it up. So we're seeing quite a few overage agreements, particularly in the countryside. What else are we seeing? Rights of way aren't too much of an issue. We just normally have to check that they've been maintained, and it's the cost of maintaining rights of way that's what we tend to ask for. Other than that, the title issues aren't generally too bad at the moment. We're finding the lender solicitors have been very good and saying these can sort out post completion.
So are you finding many splitting title? It's not something we would all recommend at the desk, I must admit, for a number of reasons, but there are occasions where titles need to be split.
We are, where they've got a few fields that they keep the horses on, then we're seeing those being split. So obviously there is one lender, I don't know how, I always call it the Simpsons movie Dome. If you've ever seen a movie where a dome appears, again, one of the vendors will allow, rather than have to split off the deeds, they'll just put a charge apart, as it is known, over the property in the garden, and allow the clients not to, because sometimes you don't want to split the deeds. The minute you start splitting deeds, Jane, you potentially run into an argument with the revenue about, well, if that's the coverage of your property and you've got those fields on a separate title deed, well, you can pick up against tax on those. Whereas if it's all in the house, in the remit of the house, you don't pick up against tax. It's all principal private residence exemption. So we try to avoid splitting deeds where we have to.
Excellent. Well, I think that's most of the things that are sort of on the legal side. I just wanted to cover off a little bit on the completion day.
Yes.
How is that decided, and how much notice do you need to give the lenders, that sort of thing?
Well, unlike the normal mortgage market and the sale and purchase market, it's all on them. We have no choice in it, Jane. We can say a completion date and they can work towards it, but 99.9% of the cases, we send off the papers and we are waiting for the lender solicitors to choose a completion date. And if we said actually, there's a penalty up until the 30th of April, that's completed on the 1st of May, the lenders are pretty good on that. The solicitors are pretty good. But generally, we as I say, we want completion ASAP. So that's where clients are wrong. Like, well, why do you not get me completion date? It should be 3 days. It's like, no. We are dictated to by the vendors' solicitors as to what completion date they give us. One thing I'd love to stress to everybody now is, of course, on completion date, I'm getting emails on completion day at 9 o'clock saying, have you got the funds yet? It's like, no, the majority of our funds come through between 4:30 and 5 at night. So I know. So when we're doing fast pay, so the team nearly collapsed, and they're ready for a strong cup of tea, shall we say, after that. So if you're sending things by fast pay, or if you're doing it for a related, certainly a related purchase, we flag this up and we tend to get them a bit earlier. But in a normal case, where fast pay is almost pointless if they're only getting it at 5:30 anyway. So what happens is, well, the lender solicitor set up these completions, and they are just in a queue. So we will get it. We will get it when we get it. And as I say, it's very rare to get any funds at all. Very many funds at all before 3 o'clock. It tends to come largely between 4 and 5, if not 4:30 and 5.
Good heavens. I didn't realise that. I mean, how many days notice do you actually have to give the lender to send the funds through? Is it 3 days, 5 days?
It depends on the lender and the lender's funder. We just say ASAP. The notice that we get back is usually a couple of days. Sometimes we do on-the-day completions where every shares in an act phone us and say, we're ready to go, can we complete this one today? Happy days. So it's very rare we'll say no to a completion date.
Fair enough. And do you find some of the lenders are putting clauses on to repay, like IVAs, debt management plans, credit cards, and obviously mortgages?
Yeah, particularly Hodge tend to do that more than anybody. Occasionally a few others. I saw more probably 6 or 8 months ago. I've not seen so many during lockdown. But yeah, we do that, to repay credit cards. It's an absolute nightmare when they put it as a special condition, because of course we then, the solicitors, have to liaise with, I don't know, MBNA or whoever has credit cards, and you have to get letters of authority, and and you say, well, what's the point? Because I can pay off a credit card today, but they can put it all back on again tomorrow. They can go spending tomorrow. So, and the IVAs, yes, we sometimes get those as well, but probably less than 1% of cases, Jane.
So with obviously the surplus of funds go obviously off to the borrower.
Yes, and they have two choices, Jane. They can either have them by backs, which is 3 working days transfer free of charge, or by the same day payment for which there was a charge.
Fair enough. And what about if the broker's charging an advice fee?
We tend to pay that by, that always goes, we don't do checks anymore in the office, Jane. It always goes by the backs payment.
Right.
They'll have it within 3 working days.
And I suppose it's a good time to actually remind our members that the deal with AdviseWise with yourselves and Richard Apsley at GW is £650, isn't it, for a straight remortgage, which includes a home visit, VAT, and standard disbursements. But obviously, if you've got any complications, there will be additional costs.
That's right,
which is very good, because I mean the industry standard is in excess of £800 at the moment, isn't it?
Yes, and some even higher.
Yeah. So, and you've also got your specialist there, haven't you, that does all the complicated cases, called Chris? I mean, I know you do them as well, but
yes.
So our members, just so that they know that it's a good idea to use specialist solicitors in this market, because as you can see, it's not always straightforward.
And the team. So Chris runs on what we call the non-standard team. So he's got there's a team of 3 of them that will deal with all the matrimony and the lease extension cases and liaise with our colleagues within the firm to make sure. And Chris is very good, actually. He's got quite a good knowledge, very good working knowledge, and we can preempt the questions before they even arise. So yes.
So I think we've covered off most things, haven't we?
Yes, I think so. Yes. So I think the one thing I would say, Jen, and you're the first person ever to answer this. I think on completion day, anybody listening to this, we lose so much time during the day dealing with saying, is the money in yet? It's like we are not in charge of when the money comes through. It will come through later. We know it will come through later in the day. So when you're speaking to the client, say, look, go to by the phone at 9 o'clock. Go to the phone at 4 o'clock, and we'll probably phone at some point then. And so I think it's an important one though, Jane, really, that we are not in charge of A, the completion date, and B, the time it comes through. And also, Jane, don't forget, when a case is coming through an act and Optima, with the likes of Pure, and there's a few others that they act for, but they get the redemption statements. So when I get very huffy phone calls saying, but you said you've been waiting for a redemption statement, I have, but it's not as I get it. We are specifically told by Nat and Optima, Ashfords, you do not request redemptions, please. We will request them. So, that is out of our control. So obviously the Eversheds cases, like LNG and Waiver, etc., that we supply that, but the other cases, they get it themselves for their insurance requirements. So, and I always say to customers, phone up your bank, make sure they've had this request through from Nat and Optima, so they can see it's been done.
Well, a very good point, actually, and something advisors need to be fully aware of, I think. And we perhaps need to do more of these to make them, aware of the situation, because it seems to be constantly changing as well, doesn't it?
It does. It does.
So, well, thank you very much for your time, Peter.
Pleasure, Jane,
again, very, very informative. And we'd welcome any questions from our members on any legal or any issues regarding equity release, because we will be doing some more Ask Jane series. To enter our prize draw for every KFI you put through our portal, you will be put forward, and also we plant a tree. So thank you for your time. I hope you've enjoyed, and I'll see you again soon. Thank you.